Hi everyone and welcome. This will be a bit of a different video from the previous ones, and I want to spend some time on this topic that too often, especially from traders that are just approaching the market for the first time, is a bit discarded, not judged with the attention it needs, and it is the mental aspect of trading. This is a key aspect to improve your trading. Whatever is your strategy, whatever is your setup, your edge, the market you're trading, unless you're basically trading algos and really letting them go on their own, the mental aspect will always have a great role in your trading, whether you believe it or not. In this video, I'm going to cover 5 things, knowledge and mindfulness, and how they somehow mix in your final outcome and our final outcome in the market. How important is the mental aspect in trading? How to keep the emotions under control? How to define your own rules? And how to respect those rules. So first of all, knowledge and mindfulness. And what I mean is you don't only need to know your strategy in order to be profitable in the market, but you also need to know yourself. And by knowing yourself, I mean being able to recognize what's going on within yourself while you're trading. It can be that you're feeling FOMO, the fear of missing out, when you see a stock going without you and you want to jump right on it and at risk of entering too high. It could be a fear like the one I'm often having, and that leads to hesitation when you need to take an entry. You see your setup, you know it's good, but somehow you hesitate, and that's caused by fear of losing money. But it can also be the revenge that you can, the feeling of revenge that you experience when a trade doesn't go as you liked or as you hoped. And all of these can really lead to very bad situations, and I've seen basically every single trader that I know incurring in his or hers biggest losses because of mental errors. The biggest losers are never, in my experience, caused by a bad setup by itself or an unlucky trade. That doesn't exist. The biggest losers are, I would say, 99% caused by mental errors. So you don't only need to know your strategy, but you need to know what's going on within yourself. And now is an interesting question, which is how do you think is important the mental aspect in trading compared to the rest? Is it 10%? 50%, 90%? To me, I would say that without knowledge, you're clearly just trying and be lucky in the market. Whereas without the mindfulness, you're basically eating yourself constantly over and over and over again until you basically fall on the floor and you're not able to rise again, no? And stand up again. If you take a moment to think about your biggest losers, try to figure out how they happened. Were you holding something, expecting to recover and hoping to get back your money? Did you hold too long while being the profit and went in the red and then lost more money, hoping to get back to green? Did you have a too high entry, or as I said before, you were chasing it? No. try to spend a moment and figure out what these errors were caused by, and when did they occur. And then the next question is, can these errors be avoided, and how to avoid them? And this is a very important aspect, and it's, I think, the key in order to become a profitable trader in a consistent way, is just to be able to avoid those errors. The key to avoid these errors is keeping the emotions under control, which is very different from getting rid of the emotions. And many people say you should trade like a robot. Yeah, that's easier said than done. The reason is you will, especially at the beginning, and especially if you have a small account size, you're putting quite some risk, no, in what you're doing. You will feel emotions, and some very good traders that have millions in profits still feel very emotional about their losses. Sometimes also about the winners, which is, I would say, good. Maybe it's still not trading like robots. My opinion, even if I'm not the most experienced trader in the world, I just have a bit more than 1 year in experience in the markets, is that you cannot really get rid of the emotions. What you can do is to be able to recognize when the emotions are kicking in, and how to deal with them. And this is the importance of mindfulness in trading. Being able to tell yourself, wait, I'm feeling like this. I shouldn't be trading in this situation. Am I sure I'm taking this trade because that's the setup I'm looking for? That's the entry I'm looking for. I'm sure that I know my stop, I know my target before entering this trade, or I'm just jumping in because I want to get back my money, I don't want to be in the red, or whatever other reason that may lead you to an impulsive trade. Sometimes impulsive trades are fine if you're really in the zone and in the moment, and you're basically trading in sync with the stock. So you're going by impulse, but still respecting your rules. No, it's like being in control, completely in control, even in a not really conscious way. Here instead I'm talking about something different. Is when you take something just because these emotions are driving you towards this trade that you're taking. I think the most useful maybe way to keep the emotions under control is to define your own rules, which means that yes, you should have a strategy, and you should really stick to it. Like you know your setup, the setups you're looking for. You know your entry, you know your stop, you know your target, and you know when the setup is no longer valid for what you want to do. Another way to define your rules, and I think it's important, is that rules must be simple to follow. If rules are overly complicated, and I think I fell into it as well, and my first trading plan was a very long series of if and then, and if do this, if this happens, do that, but not if these other things occur. The thing is, in the market, basically everything can happen, and so it's very hard to keep track of those rules, and if you're really sticking to them in that case. I think rules must be very simple to follow, and you should be very comfortable at the end of each trade to tell immediately whether you followed them or not. So I think when you write your rules, it's a good idea to being able to answer either yes, I respected them, or no, I didn't. Anything in between, like yes, but no, but those are not great rules. I mean, they can be improved. And this is very important instead. If you don't know where you fail and how you fail, that's the basic to write your own rules, because you have to know where your weakness is and how to avoid it. No, in order not to jump into the emotional bandwagon again and trade without, like a berserker, without knowing what you're doing. The first and most important thing you have to do is to figure out what causes these errors, these emotional errors, and where is the weakness also in your strategy. Because on the one hand, you need to trust your strategy and really be confident that is supported by the data, no, that you're seeing. By the setup works, yes, in which conditions? With these conditions, perfect. You know how to deal with that kind of setup. You know when it's no longer valid, so you should stop. And then you trust your rules, you trust your strategy, and therefore you can start to rule out the strategy issue, and then you can focus on where the strategy was on point, but the emotions were not. And so you were no longer trading your strategy, but you were trading your emotions. But if you cannot see it already, it's a very good idea to start reviewing your trades. This can be done in several ways. In the beginning, I used a shared Google document that I used to place my entries, my exits, and simply highlight each trade I was taking in a color so that I could tell whether it was by emotion or not a great setup, or maybe managed poorly but a good setup, or vice versa, not a great setup but managed pretty well, or it was a very good trade. Use simply red, orange, and green for this. And then I started to lower the number of trades that I was taking, and by doing so I was able to actually review these trades much better, spending more time on them, and that's basically where the whole blog idea for the trades came out. That's basically my way to review my trades. The next step, once you have your rules set, is to try to respect them. And also this is quite easier to say rather than actually doing it in a consistent way. What happens most of the time is that you write your rules and then somehow you decide to do something different for any reason, no? The thing is that the market often provides you a positive feedback when you don't respect your rules. For example, you may take a very extended setup, which is not even a setup, it's just you chasing the stock, and get a great winner. And that will tell your brain you did a good thing, because you feel good by the fact that you actually earn money in that moment, but you didn't respect your rules. On the other hand, you may, for example, have a negative feedback if you base it on your trading profitability in that moment, in the single trade, not in the long run, by telling yourself, oh, you know, I stopped here where my rules were telling me, and then it bounced immediately and went without me. And you feel bad by the fact you respect your stop. And so you get a negative feedback. So the first thing to do, this is very important to respect your rules, is the rules must be clear so you can easily follow them. But that's a repetition from before, but I really wanted to stress this. Then you need to create a positive feedback loop on these rules, which means that every time that you follow your rules, you should be proud of yourself. Even if it leads to a minor loss, or not taking an entry, or because you didn't get your entry, and then you're not chasing it, and even if the stock then goes to the moon, and you're not into it, you did well, because you respected your rules. Your rules were telling you not to enter at that price where you would have entered if you didn't respect your actual entry that was instead defined by your setup and your strategy. You can clearly work on your strategy, work on your rules in a later stage, no? Not while you're trading. You shouldn't bend the rules and try to adapt them. You should work and see the rules as something alive, something that you can change in the future. You can change it any moment, as long as it's not during the trade. You shouldn't be changing the rules while you're inside the trade or about to take a trade. You should change the rules once you have reviewed your trades, found out the shortcomings of your strategy, and then define that you may need to add one rule, add a new setup to your strategy, and things like that. And third, it's very important, and this is again a matter of mindfulness, to be able to recognize your triggers. What is that drives you insane? Because it's insanity. What is that let you take these trades that then lead to very bad errors, just driven by emotions, and figure out how those triggers are acting on you? For some people, it's going from green to red on a trade or on the day. For others, is hitting the max loss, and then maybe they try to recover, so it's max loss, but they continue trading, and then they end up digging even a bigger hole. It can change. It's something very personal. For me, for example, it was when I was approaching my max loss by, let's say, 50%, I more often than not ended up trying to get green, and by doing so, I was really no longer trading my strategy very well, but I was trying to trade my P&L, and this resulted more often than not in ending up with hitting max loss, which means I could have easily saved the 50% of my losses for that day by just stopping there. For other people, it's going, as I said, from green to red, or from green to flat on the day. It really depends, but you should try to recognize them. The final important thing that it results from writing the rules in this way and trying to respect them is to judge your trading based on whether you followed your rules or not whether you're green or red on the day, because you can always be red by trading well, because simply the market may not go in the way you think it is going, and you may end up green trading like an idiot. There are people that just plain lucky. They take gambles, not trades, but they're lucky and they go green. But the thing is, they won't be green in a consistent way. They are more likely to lose everything they made and even more by not following these rules. Instead, if you keep trading according to your rules, it may take longer. You may not get that gambles, huge winners that sometimes work and sometimes not. but in the long run, it will make a huge difference. And so that I think it's very important. Just to finish this, I suggest a book, Trading in the Zone by Mark Douglas, which was really enlightening for me about this topic. It really helped me to keep emotions under control, which again is not meaning I don't feel emotions. I really feel a lot of emotions while I trade. I can feel my heart racing when I'm in the trade quite often, and it's emotional, but I recognize them and I try to avoid being led by the emotions themselves. Second thing, write your own rules. If you haven't, just a simple piece of paper, and pinpoint this piece of paper somewhere where you can always see it. And then finally, track your performance. It's important that you figure out whether you're following them, whether you're not, what's good and what's not in your trade. It's a new kind of video for me on a topic that I think is very important. So please let me know in the comments if you agree with me or if you don't. It's fine anyway. It's what matters is having a positive discussion on the topic. And if you like this, and even though it's not strictly related to charts, the profitability, that's a very cool thing, and everyone likes to see people like in the green, making good profits, or trying to find out that secret setup that works so well and that you can try to copy. But I really think that there is a lot of value in this topic about mindfulness and mental issues while trading. So I think it's very valuable for everyone, and I hope it's for you as well. Thanks for watching, and stay green. Bye bye.